What's up, traders? Matt from the Trade Brigade here with your broad market analysis for the day. We'll cover SPY, the Qs, and IWM in that order. On the left-hand side, we do have the daily time frame as always, and on the right-hand side, the 30-minute intraday time frame. First one up on the chopping block is our SPY. You can clearly see that the market is targeting that right-hand shoulder from the weekly head and shoulders pattern that we discussed over on the main channel, and we're virtually there. Sure, there's a little bit further to go, but we're basically home for all intents and purposes. And now that we have a 100% retracement of this move here, I would certainly be on the lookout for pullbacks. I know we've been saying that for some time, but now that we're coming into obvious structure here, like this double top, everyone and their sister can see it. I do imagine now may be the opportunity for some sort of pullback. The sectors we're confirming, as we discussed over on the weekly watch this video on the main channel, and we continue to see volume taper off as we climb the wall of worry, as some people call it. So in my estimation, what are the pullback levels that we want to see hold? The prior 2-day highs and today's support, that's at 450.31 cents. Okay, that's like, picture perfect, most ideal consolidation, most benign consolidation that we could ever get. If that breaks, our next level is 446. This might make sense to look at on the 30-minute intraday time frame, by the way. You can see resistance, right? Resistance here as we close right at those highs. We support, break, then resist underneath, support, support. You just get all of the technical interactions around that 450.30-ish level. So to me, that's the first one to watch out for on any sort of pullbacks. It was today's low. Anything underneath, as we pointed out, 446 coming from prior highs, resisting, support, support. We stay underneath for resistance, then boom, as we break, it's back off to the races to continue one time framing to the upside. What else do we have underneath that? It's 441, and then after that, 437 still remains the line in the sand at this point in time, noting that that's more of a 50% retracement now that we've put in some more range here. Yeah, look at that. So your 50% retracement is now starting to coincide with that 437 instead of the 38.2, but the 38.2 coincidentally is now coinciding with the 441. So the pullback levels are still valid to the downside, but we really don't want to be getting down into that 437, noting how much of a retracement that would be at this point in time. Ideally, we would respect the 38.2 on the deepest of pullbacks that we would get after this really significant rally here in our S&P. So what else can we learn about the price action? How was the close on today's session? It was strong. It was really bullish. There's no doubt about it. We had a little bit of a liquidation break earlier on in the day. We talked about that in the Discord. We also talked about it on the Sunday video over on the main channel. As we cracked the high of day, we did put in a spike into the afternoon. So something to watch out for in tomorrow's session would be how do we fare in relationship to this spike? So let's draw it in now. I'm going to go ahead and grab the other tool here, put in some horizontal levels. I know it just looks like we have a ton of lines on our chart, but this area right here is going to be very important. Why is that? Because there's basically no structure. The market ran out of time before we could deem whether or not those prices were fair. In the market profile terminology, that would of course be referred to as a spike. So we'll see. If we remain in the spike, that's where two-sided trade can resume. If we open above the spike, we would look for continuation, noting that sellers are not willing to step in at these levels. The natural buying activity in the market should take over and carry us higher. And if we open below the spike for tomorrow's session, that's a more bearish indication. Maybe that's when we get that more significant pullback into some of these levels that we've outlined below. So keep in mind this area. We will be discussing that tomorrow in the pre-market live stream. Let's continue along and go on over to the QQQ for our NASDAQ 100. What do we have on the docket here? Very similar look, obviously targeting this double top from in here, 369, daily 200 SMA, the green line on our charts. And there was basically no hang up at 362 either. Let's remove that. It was just the prior top of this balance. We know that this has been the significant target anyways. Let's see how we're faring on the 30-minute time frame. You can certainly start to draw in bit of a support trend line, right? This is our day of pullback when it first came, and now we've been grinding along this trend line to the upside. Some people could probably make the argument that it's actually a rising wedge, which we know is a bearish pattern. However, I'm just not seeing it that way. I do think that we could be in store for consolidation once we achieve that 200 SMA, that 369 level, but I wouldn't, call this a bearish pattern in this particular context at all. So I would watch the trend line. If it breaks, I would just look at it as a trend line break, not the playing out of a bearish pattern, and instead look to fill up the triangle. The next major level is really here at 352. That's an important one. You can see all of the interactions we had here as well as here, and also prior resistance, then turning to support, support, resistant right there at that high. So really 352 carries a lot of weight to me on any significant pullbacks here on the smaller time frames. Underneath that, at this point in time, we probably want to see this level hold up around the 346. Let's quickly take out the Fibonacci's from the low up to the high just to get the sense. And again, your levels, your 38.2s, 50s, and 61.8s are still coinciding almost nicely with these three levels we have down below. But again, at this point in time, I would want to see the 38.2 and that 346 level act as a final line in the sand, noting also it would be a break of the trend line all the way back down to the base. So that's worst case scenario pullback in my estimation. Could be much more benign than that. This is also a very important level that I would want to point out right here. You can clearly see we're resisting, and then here we kind of hold it, right? So sure, a little bit of a fake break, but for all intents and purposes, right? This is a break, retest, hold, and go. You can even get the sense for that into this afternoon session, right? Something that does this, holds the prior resistance area. We've now turned it into support, which of course is a bullish indication. Just like in our S&Ps, we will have a little bit of a spike to contend with for tomorrow's open. That's going to be above 363 up to today's high of day. And again, the same sort of theories and scenarios will apply. Opening inside of the spike, two-sided trade can resume. We would watch for a break either up or down out of it. Opening below the spike is the most bearish outcome, negating all of these buyers up here, proving them wrong, and we would look for lower after that. And if we open above the spike, I would just really start looking out for that 369, noting that the market did not auction high enough to find any new sellers interested in these prices. So that's what we've got in our QQQ. We talked about pullback, we talked about continuation, we talked about the indications of the spike. Let's round out our broad market with our IWM Russell 2000 and the small caps. What's going on in IWM? You can clearly see that we're still remaining at the top of this range in this little micro range, putting in nothing more than a bull flag period of consolidation. We do have a hammer candle on today's session. Nice long lower wick, fake break of the lows of the flag, which is important. So technically, yet again, this is a look below and fail. We're trading at the midpoint of the range. If we can find a breakout level in here, it's probably this resistance trend line. We'll talk about it in a second. The next level would, of course, be the top of the range to fulfill the look below and fail pattern at 208. After that, we know more significant risk on type breakouts can occur. If we break out of the flag, recapture 208, we start moving towards 212 and ultimately are recapturing the bottom end of the weekly channel that we spent so long inside of. We know it's also a potential double bottom neckline here on the weekly time frame for something that does that. From the 30-minute perspective, let's talk about that trend line now and when the potential break could be underway. I think we'll find that it actually is underway as of today's close. Yeah, look at that. So you can see resistance, 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 respecting it nicely. On the close, we clearly break that. So to me, bullish indication, we are looking for follow through. If you're not long on the break of the trend line already, the next level would really be something like this. Grabbing the other tool quickly, a break up and over 206 quarter maybe, so consolidation, then a break. That's an entry right there for a long trade into that 208. A pullback that's respectful of probably this level right here. The reason I'm calling that out is because it's basically the morning lows of the balance. We resist there a little bit as long as we pull back and support there for a higher low, continuing something that does this. Maybe that's another entry as well. So be on the lookout for 205.15, 205 even on pullbacks. Basically anything at this point in time that remains above 204 is bullish just based on what happened on the daily in my estimation. Like there's nothing screaming bearish about this. The long lower wicks, the repeated buying activity into the close strikes me as fairly bullish. We don't really have the spike as we do with the other broad market indexes that we were talking about. But if we would, it would have been right around in this area. Again, we already covered what that would look like as bull flag consolidation on the smaller time frames and the possibility for a breakout underneath 204. Again, you can only do the look below and fail too many times before it's like enough's enough. The sellers are probably going to take a foothold. So I would not want to see IWM underneath 204 again. If that does happen, it probably does lead to a more significant breakdown, noting that we've done it multiple times now, and we are putting in technically lower highs, lower highs, lower highs, which is why this break of the resistance trend line is so important and actually a bullish indication because it's negating the possibility for this to turn into a descending triangle, right? So we really want to see that follow through up and over 206.25 to remain bullish in IWM and target the top end of the range here at 208. That's our broad market in a nutshell. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.